In Section 10-2, we're going to learn how to journalize our cash receipts using the Cash Receipts Journal. Chapter 9 was using the cash payments, so that was money paying out. This is money coming in to our company. A few things to look at. Anytime you buy something, a product usually has a UPC, a Universal Product Code, a barcode that they use to scan the item to ring in the sale. You've all probably seen a cash register receipt at some point, the name of the company of the place you bought some items, the items listed, the amounts, the subtotal, tax, and the total amount you paid. Point of sale, it was POS, terminal receipt. This is just a receipt of the items at the point of sale. In this case, it was paid by a Visa. Terminal summary for the day, this is a report each day listing all of your credit card sales, in this case Visa, MasterCard, and cash, grand total for the day, sales tax brought in, and a grand total of the amount with the tax. A batch report at the end of each shift. If you've ever worked at a fast food or a retail establishment, usually a batch report is done for all credit card sales. Again, here's Visa, MasterCard, and then the totals for the day for those. This is what our cash receipts journal is going to look like, very similar to our cash payments from Chapter 9. We have the general debit and credit. We have this time accounts receivable credit, money coming in. Sales credit, our sales for the day that we made. The sales tax, our sales discount if we give somebody a discount for paying us early. And then the cash debit, money we're bringing in. Here's our first example of a transaction, November 4th, recording cash and credit card sales of $54.60 plus our tax of $327.60, bringing in a grand total of $57.87 and 60 cents. Terminal summary 34. So this is our sales for the day that we brought in. Whether it's cash, credit, doesn't matter. We're still bringing in this money. So in this case, all the steps are listed. This is in the PowerPoint and what to do, but we put the date. We don't have an account title for our recorded sales for the day, so we use the check mark for that account title, and in Applet we use the little V for our check mark. TS34 for terminal summary 34 goes in our document column, and post reference we're going to put that V in there as well. We'll explain more about that later as to why, but we put the V in the post reference when we have a V in our account title for our sales for the day. Sales brought in, this is the amount we sold for the day, was the $54.60. Our sales tax, the $327.60 cents. And then the total cash brought in would be these two added together. Again, two credits must equal your debit. Our second type of transaction is cash receipts on account. So November 6th we received cash on account from Country Crafters, $21.62.40, covering that sales number 69. This time it's receipt number 90. So somebody called Country Crafters, bought something from us on a buy now pay later type of thing, bought on account, and now they're going to pay us that debt. So we write the date, the name of the company, the receipt number, the accounts receivable is credited because they're paying that debt off, and we're bringing in cash from them. So that's a debit. Debit goes up with cash coming in. These two debits and credits must equal. Third transaction, November 7th, received cash on account from Cumberland Center of $11.76, covering sales invoice number 74 that was $1,200, less a 2% discount of $24. Some of the transactions that they're going to give us in Applia tell us the discount that we're giving somebody, but it doesn't give us the amount of the discount, so you would have to multiply the 0.02 or 2% of the amount of that sale. So to record this, the date, the name of the company that's paying us, the receipt number 91, the original amount that they owed us was the $1,200. This is their original bill, but we're giving them a discount of 2%, which is $24, 0.02 times 1,200. Maybe we want them to pay us early, so we're giving them a discount to do that. And then the total cash we're bringing in is the $11.76. Original sale minus the discount we're giving them, they're paying us $11.76. These two this credit must equal these two debits. So if we add these two numbers together, they equal the accounts receivable debit. When we're at the end of the month, we total up the columns. We put the last date of the month, the word totals, and add up all the columns. And again, to check it, we're going to do a proof to make sure our debits and our credits equal. A lot of new terms to look at in the notes. Please make sure you look at these notes and these terms and understand their meanings. So here's our directions for Applia 10 to work together. We have cash receipts journal page 16 for graphics company, and it's telling us our abbreviations for the source documents are R for receipt and terminal summary is TS. October 4th, received cash on account from Oakley Company, $371, covering S96, receipt 144. So it's the receipt that we're going to be looking at for our document number. So here is our Applia problem. Again, the date, October 4th, the name of the company that's paying us, the receipt number R144. This was something that they previously bought from us, and now they're paying their debt. So it goes in the accounts receivable credit column because they owed us this money, $371. And they're paying us cash, so the cash is going up. Cash increases with a debit of $371. Our credits and our debits must equal again. Transaction number 2, on the 13th, recorded our cash and our credit card sales for the day, $83.61.60 plus our tax of $501.70 for our grand total of $88.63.30, TS 43. So we're just recording our cash brought in for the day. Our second transaction on the 13th, again recorded this sales transaction. So here we go into Applia. 13th, to record our sales and our credit card sales for the day, we put the V, the terminal number, so TS 43. We are putting in the total sales that we sold for the day. The amount was $83.61.60. The sales tax of $501.70. And our total cash brought in would be these two added together for the $88.63.30. So again, making sure our two credits equal this debit before we move on. Our third transaction on October 30th received cash on account from Sierra Company covering S97 for $59.89 less the 2% discount. Here's an example where they tell us the discount but they don't give us the amount. So we're going to take that amount and multiply it by 0.02 for the 2%. So here we put the date, the 30th. Sierra Company is the name of the company that's going to be paying us. The receipt was the R145. The amount that they owed us is the accounts receivable credit. So the amount that they owed us was the $59.89. So we plug that in here, $59.89. And we have to multiply that number by 0.02 to get our discount. So when we do that, we get $119.78. And how much are they actually going to pay us? Well, we take the amount that they owed, the $59.89, and we subtract the $119.78, and the amount that they're going to actually pay us is $58.69.22. So just double check to make sure we take the original amount they owed us, subtract that discount, and get the cash. Add up these two debits to make sure that equals this credit. So now we just have to total up the columns. So we put the last date of the month, the word totals, and we add each of the columns going down. So here's our grand totals for each of the columns, and then we have to do our cash or our proof to make sure our debits and credits equal. So just carry these down into the appropriate columns. We have nothing in the general debit and credit, so we just leave those blank. And again, just make sure they're in the right columns, debit or credit, and it tells you right here, credit, so make sure it's in the credit column. So the 6360 goes here and so forth. Now we just add up the columns to make sure our debits equal our credits. Our grand total should be $15,223.30 for each of the columns. And once that is correct, we know we can move on to the next step. So here's our directions again. We finished up number 2 for the end of the month, total and prove the cash receipts from the journal page 16. Now we're going to prove cash. So this is our cash proof down here. Some of the amounts are given right in the instructions. So I'm going to point out which of these numbers are given. So prove cash. The October 1st cash account balance in the general ledger was $11,764.96. So that first number that they give us goes right here, cash on hand at the beginning of the month. So we're going to plug that in right now. 11,764.96. So just make sure that number's the same, 11,764.96. The October 31st cash credit total in the cash payments journal was $8,779.53. So that amount is given to us, and we just plug that number in right here where it says the less total cash paid during the month. So cash payments means cash that we paid out. So let's plug that in right now, $87.79 and 53 cents. And the last number they give us on October 31st, the balance on the next unused check stub was $18,088.95. So right here, checkbook balance on the next unused check stub is the amount they just gave us, $18,088.95. So those three numbers are given, so we might as well just plug those in so we know that those numbers are done and where we got them from. The rest of it we're going to get in our cash receipts journal. So it says plus, which means we're going to add something, total cash received during the month. Well, here it is, cash debit. Remember, money we receive, debit, is what cash increasing means. It's debited. So this grand total right here, $15,103.52, is what we plug in right here. $15,103.52. And because it says plus, we're going to add it. So add those top numbers right there, and we get $26,868.48. And now we're going to subtract the money we paid out. So we got the beginning of the month, added the cash we received during the month, equals a total. Now we're going to subtract what we paid out during the month. So this is what we were told. So we're going to subtract 26,000 something minus the 8,000 something. And we're going to get 18,088.95. And look at here. That number, the end of the month balance, should equal the next unused check stub balance. So these two numbers must equal before you can move on. If that's the case, you are ready to move on and go to the next step. But that is the last directions in our Aplia problem. So go ahead and finish up the Work Together 10-2 if you haven't already, and go on to the On Your Own 10-2.